Welcome to the Learn to Trade with BlackBull Markets podcast. I'm your host, Mark O'Donnell, and joining me today is James Clark, one of our newest account managers here at BlackBull Markets and an EA enthusiast in his own trading. On today's episode, we'll talk about EAs and what you can do to improve their performance. Welcome, James. It's great to have you with us. Can you tell us what an expert advisor is and why they're so popular among traders?
Sure, Mark. So expert advisors, or EAs for short, are automated trading systems that basically can save traders time and effort. The EA lets you analyse the markets and execute trades based on predefined rules and parameters, effectively removing the roles of emotions in trading. I know that's something that I've struggled with a lot in the past, so I find EAs extremely useful. I know a lot of other traders actually feel the same way.
That's great. So you have plenty of experience with these trading tools, which is what I want to tap into in this episode and why I asked you to prepare 5 tips that traders can use to improve the performance of their EAs. The first tip you gave me was to take advantage of market conditions. So what did you mean by that, James?
Well, in my experience, I've noticed that some EAs actually struggle to adapt to the dynamic market conditions, and that's basically impossible to program them to perform optimally in all situations. The solution I see to avoid the EAs that promise to work across different timeframes, asset classes, and market activity, and focus on EAs that work optimally under specific conditions and only use it when those conditions arise.
But doesn't this negate the use of an EA to automate some of the trading process, though?
Yeah, I guess so, but I don't think monitoring the market for the right conditions is something that should be shrugged off, and you can always set alerts to help with the monitoring.
That makes sense. What's the next tip?
Traders need to be prepared and have an appropriate exit plan in place for when the market shifts. So, for example, what's your plan if your range trading EA is caught in a breakout, or if your momentum EA becomes the victim of souring market sentiment?
This tip sounds closely related to tip 1 as it addresses the issue of an EA not working under all market conditions.
Yeah, it is, but it's approaching the problem from a different angle. The question about what you should do when the EA finds itself in a market it is not made for should be answered with a practical measure that you can put into action, such as scale out of the position at the specific intervals.
Nice. So what's the third tip?
The third tip is trade on a lower spread account to reduce costs. This is obviously applicable to all traders, but as a fundamental element of trading, I like to include it when talking about EAs too. Trading on a high spread account can affect the performance of an EA and obviously can result in losing more trades.
Maybe traders should consider a lower spread account with a commission option, maybe?
Yeah, in some cases, they may be better suited for EA trading.
Okay, what's the fourth tip?
The fourth tip is to utilise a VPS with your EA.
Sure.
In an ideal world, your EA should have 0 delays in their order executions. With a virtual private server, VPS, you can reduce the delay to an absolute minimum. With a VPS, your EA is running on a computer in a data center. The VPS cuts delays and improves reliability and redundancy compared to running the EA on your own server. For our clients, BlackBull Markets has a VPS server in London, Tokyo, and New York.
Nice. So what's your final tip?
My final tip would be to use live data to backtest your strategy and extensively test it. Just because your trading system looks good on paper doesn't mean it's going to be effective once it's live. Often I see poor quality pricing data used in backtesting, messing with EAs. Traders should ensure their strategy is tested on the exact data they plan on trading.
Should they test the EA on data that they will not be trading on too?
Yeah, they should. Doing so could be a good idea to get an idea of how the EA reacts to unintended trading conditions too. Especially it will help you answer the exit plan question I was talking about earlier.
Very true. Those are some great tips, James. Thanks for sharing them with us.
My pleasure.
Thank you for joining us today. If you have any questions about EAs, please feel free to reach out to our BlackBull Markets account managers like James here, and they'll be happy to help. Thanks for tuning in. We'll be back with some more trading insights next week. In the meantime, from everyone here at BlackBull Markets, happy trading.